Now we're in the pre-retirement years as we talk about the need for life insurance, and this is part of our holistic planning approach at Gen Wealth too. And one of the obvious things there is if you don't come home, if you're the primary salary earner in your home, if you don't come home, there's the immediate responsibility of paying expenses and debt and mortgage. There's also the future contributions to your 401k or your retirement plan that don't happen. So you do need to think about if you aren't here to experience your retirement, how is your spouse, how is she going to manage through those retirement years later as well? So all of that kind of encompasses into evaluating your life insurance need, and it comes in the form of a death benefit. And we think about that being the way to plan for this. So when we look at types of life insurance that are out there, there's obviously term and there's whole life. And people can probably come to a pretty immediate recognition or awareness that I probably have a gap here. If I don't come home tomorrow, I need some life insurance. But determining what type of coverage, Tony, what are some thoughts for folks on going about figuring that out?
Well, of course, whole life, it's going to be there forever. As long as you keep paying the premiums, you'll have the coverage. But typically that can restrict, not everybody has an unlimited budget when it comes to getting life insurance. So we're typically going to look at term insurance, and we're, as part of your whole plan, we're not trying to make that amount of coverage cover your whole life. We want to get it to replace the income and bridge us to retirement. So going with term is going to allow us to purchase the full amount that we actually need, which, your advisor will get with you and we can figure out what that amount is. It's going to be different for everybody. There's not a one-size-fits-all amount that's, a good, and most of the calculators are kind of rough, so we like to dig a little bit in depth on that.
I'll give you an example on that. Let's say that your spouse, if you don't come home, that your spouse needs to have $50,000 a year. Well, how many people have we seen that they're like, oh, yeah, I got plenty of life insurance. I got $250,000 at work. And that's like the end of the conversation. Well, if we just took it at $50,000 a year and no other calculations on it, that's 5 years worth. And you're probably having this conversation more than 5 years out from retirement, okay? So really, that's even in a spin down, that's not going to work. What we would really recommend is that you think about, okay, $50,000, if you were to come in to an advisor, so you meet with an insurance agent early on, but then if something actually happens, you come into an advisor with that check and go, now what do I do? Well, if you need $50,000 a year, we need you to have $1 million to be able to generate that $50,000 a year. And so that $1 million in life insurance coverage is a way larger number than $250,000. But as Tony was saying, if you go the term route, which is all I have on myself, it's all most of our team members have, probably all. I don't know that I can say that 100%, but it's probably accurate to say that that's all anybody in our team has on themselves is term insurance, because it is the least expensive way to get the coverage that you need. And so if you come in with $1 million, then we can generate that $50,000 a year on an ongoing basis. There's not a point at which we go, okay, you're going to have to replace it another way.
Want more content like this delivered to your inbox weekly? Visit fastest4.com to learn more.